Solana has made something called a pattern reversal signal. So it's very likely over the next 7 to 14 days, it's probably going to test the $12 mark again. So we're going to look at today a logical, mechanical way of shorting Solana with high probability so we can make some good money. So if you like today's video, like, subscribe, hit the bell notification. Let's dive straight into Solana. We are on a 1 hour chart with Solana. And if you saw yesterday's video, you would have seen that we said expect there to be psychological resistance over here and expect some movement to the downside. Now, this is the initial move to the downside, but we are overall expecting something like this over the coming 7 to 14 days. Even though we had this nice surge, after every sprint to the upside, you normally have something called a breather, a rest period, profit taking, which drives the price back down, also referred to as a correction. Now, even though it's a correction, we can make some good money here potentially, and also here. And that's what we're going to look at today. So we're going to look at two conditions, and we're going to make it, I'm going to talk to you in a way which is business and trade plan based on logic and rules. And if you can think like this, it massively increases the edge in your favor to make good money from the markets. So we've got the daily momentum on our dashboard, and it says it's strong overbought, which tells us the upside is limited, which coincides with the 5-wave pattern structure. So there's two things telling us upside is limited, and we're probably going to get some type of movement to the downside. So the two conditions that we're going to wait for. The first one is on the 4-hour chart. On the 4-hour chart, on the same dashboard, when this is also overbought, ideally bearish when it reads bear. In other words, it's a downtrend. This, where it says what to do, is going to change, and it's going to say consider selling. When it's overbought, it will say consider selling on a lower time frame, and when it's bearish, it will say consider selling. That's going to be condition number one. Condition number two. Oh, by the way, if you want to check out the trend identifier dashboard, it will take your trading to the next level. £1, 30 days. Test it out to your heart's content. I've done a lot of training on this as well. It just makes it much easier to read the momentum and do something called double time frame, which massively increases the odds of you making money from the markets. So with Solana, the second condition is if the 4-hour momentum, this one here, becomes bearish and it says consider selling, ideally we don't want this high to have been exceeded. If it's been exceeded, we need to just reevaluate. If it goes above here, then we need to reevaluate. So the second condition is that this high over here has not been exceeded. So this becomes overbought and bearish, and this has not been exceeded. Really, really important, right? Because we're going to talk about something called a pattern reversal signal in a second, but I just want to cover this first. So let's just say the market's done what it's done. Maybe it might even move a bit lower first, and then it does some type of pullback. So this high has not been exceeded. This becomes bearish. At that point, we want to go short, either on this swing low, if it occurs like this, or this swing low, with our stop loss no higher than this point, more than likely going to be this point over here. So that'd be a nice short trade for Solana. We can make some good profits on the downside. And again, what we're anticipating, or what I'm anticipating, is some type of move like this overall. So why am I quite confident with this particular trade? Well, there's a couple of factors. One is we have something called a pattern reversal signal, or an overbalance of price. So there's both things actually. First of all, this swing low over here has been exceeded. That's a first early indication. It's like a soft indication that this high is likely to hold, right? The first one. The second thing is something called an overbalance of price, which most people are unaware of. Now, I'm just going to clean up this chart so we can really see this. In fact, I'm going to use this red box. What we're going to do, I'm going to zoom in. Let's just zoom in so we can get it really, really accurate, because this is really powerful because we want to stack the odds in our favor. So let's just get rid of this line as well. This has served its purpose. Let's just get rid of this. We can get rid of this. Yeah, we can get rid of that. We don't need that no more. Okay, so what we want to look at is this movement to the downside. So let's just move this here. So I'm going to make this box. I'm going to draw from the high to this current low. Right, so we know the movement to the downside. What I'm going to check for an overbalance of price to the downside is this move to the downside bigger than any former move to the downside in the trend upwards? This will make perfect sense to you, because if you can get this into your mind, It can make such a big difference to stack the odds in your favor. So what we're going to do is we're going to compare it to this movement to the downside, and we're going to compare it to this movement to the downside. And if this movement here, this recent movement, is greater than this and greater than this one, that's called an overbalance of price. And it's an early signal that the price has in fact reversed. It's never a guarantee, it's just high probability that this wave 5 top will hold and that we are in fact on our way towards a correction. And then we can do a high probability short trade. So now let's just check it. Let's just double click on this. Let's just zoom in a bit. And what I want to do is I'll just hover this box, keep the size the same over this area over here. And we can see that the box is bigger, right? This box here represents this move. And we can clearly see that there's a gap over here. So this move is bigger. So that's the first confirmation. But now we want to compare it to this part over here. So let's now do the same thing. Let's just drag this box. And let's actually take the extreme. So I'm actually going to zoom in here because there was quite some wide bars here. And we'll take the wide bars. And it just gives us extra confirmation. So let's take the high of this bar with the box. And we can see only by a fraction, probably only by 5%. But we can see it's a bigger move to the downside. So now technically this box, which represents that initial move to the downside, confirms that we have something called an overbalance of price. So I like that a lot, mainly because it means we can look at the market in an objective manner. Let me just bring this back in over here. Objective manner and get a bit more confidence to say, okay, again, we can never have a guarantee, but we can control our risk and how much we are willing to risk to find out if we're right. So here we can say, all right, there's an overbalance of price. We are more than likely going to get a continuation to the downside as long as this high does not get exceeded, and we will be patient to wait. It might take another day or half a day for this to become overbought and ideally bearish. And then I'm going to look for a logical swing low. Will it be this swing low, this swing low? Will the price do this? And it might be this swing low. We don't have that information yet. So we're just going to wait now for this condition to be met. And then we can take a nice shorting position. So check out the trend identifier, £1, 30 days. It'll take your trading to the next level. I've been trading for 15 years. And double time frame momentum is one of the most powerful things. But it's very simple as well. But when you're doing it manually, it can be a bit confusing. So that's why we created this dashboard. Now you can check it out, and it's practically for free, right? The first 30 days, £1. And if you like it, it's £9.97 thereafter. Right, let's finish it on a quote of the day. We're going to go with chapter number 1 from my book. We're going to go with Mr. Michael Jordan. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I failed over and over and over again in my life, and that is why I succeed. So part of learning, part of growth, part of success is failure, but knowing that failure is the root. There's another great saying, which is every success has a mountain of necessary failure. And every great individual that's got great at anything, if you've got great at anything, if you look back at it objectively, you probably had a lot of failure at some stages, whether you regarded it as failure, that's for discussion, but that learning curve. So when it comes to trading, you're using double time frame momentum and the dashboard, there's going to be a learning curve. But it's also important to know that when you're trading, you're taking shots. Not every shot's going to go in. Sometimes it's going to be risk-free. In terms of a break-even trade, it'll be a small loss, and then you have some small wins, and then you have some big winners. And that's just the art and the science of trading, and consistency is going to become your best friend.